Guys, good morning. April 14th, 2020. It's a Tuesday and earnings begin. Finally, the earnings season is here, guys. So a couple of trades we're considering today based off the earnings of the financials. Our goal is to identify the predominant behavior in the market this week and to apply it over the other companies that are fixing to announce earnings tomorrow or the next day. So get ready to trade, even if your account is small, guys. This is a phenomenal week that is finally starting. And even more so next week. So with that said, don't take a ton of trades this week, but really position yourself for next week, because next week a ton of companies are going to be announcing earnings. And by that time, we will definitely know the predominant behavior in the market of how the institutional investors are responding to the earnings that are coming out. And therefore, it's going to give us a very high probability setup to be able to take advantage over these earnings. Now, so far, some really crucial developments that are happening. Pre-market, we're seeing a ton of divergences. I mean, the key thing, just think about it without using any charts or anything, just pure logic here. Okay, the market is acting as if we never lost 17 million jobs over the course of the last 3 weeks. The market is pricing stocks right now as if nothing ever happened. Now, with that said, it's pure insanity, but it creates an unbelievable opportunity that we are going to be able to capitalize on the short side. But the time is not yet. So today we're going to dip our toes in the water just a little bit on some of these earnings plays, but make sure with a strong sentiment that's driving the FANG stocks, your Amazons, Teslas, Apples, and so on, make sure you don't put any big position against these stocks yet. There are some levels that we're targeting those things, however, because these move higher in these FANG stocks is not going to be long-lived. But in the meantime, okay, it does make, if you're a VIP, you know, I've talked to you guys yesterday. We had a great trade on Amazon. But that is just, guys, that is just for big accounts. If you got a small account, it really makes sense to stay away out of these trades and really target some of these earnings plays. VIX is under 40. So we're talking about the VIX trading tunnel. We're finally under 40 in that. At the same time, this is where the biggest divergence in the market is right now. So VIX is dropping under 40 as if everything is fine. As if, okay, the unemployment is not going to hit 20%. Okay, as if oil is not trading after the oil deal. Get this, oil is in the 21 handle after the biggest oil cut. Well, that's what they keep portraying in the news. We just had the biggest freaking oil cut ever in the history. Well, why the fuck is oil down 25% since the deal is made? Okay, that is the divergences that we guys looking at today. So with that said, we want to continue shorting oil. Here's a snapshot of oil right here, guys. This is when the deal was made, all at 28 bucks. So far, pre-market, we're at 21.57. That's $7 lower within 72 hours on the biggest oil deal in the history of oil. Is that what's supposed to be happening? No, this is a huge divergence. But the question is, why is the market not responding? Guys, it's simple. It's the delay effect. We may have to be patient for a week. We may have to be patient for 3 weeks. But there is a phenomenal opportunity comes within this phenomenal divergence. And back forward a little bit, just Johnson & Johnson's guy, we want to buy puts on this. JP Morgan, we're buying puts. Roku, yes, we're buying puts on Roku on good news. It announced some really good numbers after hours. Yesterday, the stock is up pretty much 15%. We think it's going to make a brutal pullback at some point intraday. We want to short Roku on any bounce. Boeing want to stay short. Amazon temporarily bullish, but overall looking for an entry on the put side because this thing is not going to keep flying to the moon. For right now, Amazon, you know, it's got a little bit of momentum going. That momentum could be intensified by short sellers covering positions today going into tomorrow. So for the purpose of trading, if you got a bigger size account, Amazon calls they're pretty safe. But there will be a moment where these rallying FANG stocks is going to come to a pause. It's going to happen over the next 7 to 12 days. There's going to be an awesome moment. I really hope that that moment will coincide with like a Thursday, Friday type setup where we can really rock and roll and profit on the pullback in these stocks. So even with tech stocks outperforming, right? Crazy moves in Amazon represents a huge component of the index. Crazy moves in stocks like Netflix and Apple and so on. And yet, the market cannot break out of the sideways trading tunnel between 2,700 and 2,800, as we've discussed in yesterday's video. So, perfect trade. I've talked to many of you guys on that move 12 yesterday. You basically shorted. You waited exactly to the level we pointed down to a T, basically the 27-12 area, covered the shorts, got long. It's a perfect move 12 formation. But think about it. The financials, the kind of crazy numbers that they're reporting so far pre-market, both JP Morgan and Wells Fargo, okay, there's no freaking way in the world the financial sector is going to be on fire. Okay, and so ultimately, any pops in the financial sector, we want to short them, we want to take advantage of them, okay, because they're painting a really horrible picture here. And so temporary pops in these stocks, I think, are great shorting opportunities. Understand this. Financials and tech are the biggest heavy sectors that move the indexes. So, okay, we've got a situation where tech is up, but financials are down. That tells you that overall the indexes are going to keep moving sideways. Okay, unless we get financials to participate, moving the market higher as well, we really need tech and financials for the market to stage another rally or another step higher here. So unless the financials are going to rocket higher to the moon today, that's not going to happen. With that said, tech up, financials down, market sideways. What you don't want to do is you don't want to trade indexes, because indexes like SPY, the Qs, they're going to be going overall sideways. Okay, because despite of the FANG stocks moving higher, there's plenty of technology stocks that actually keep moving lower. Now, even though some cloud stocks are definitely catching some attention of institutional investors. With that said, despite of the bullish momentum in this technology sector, we don't think it's going to last. We're looking to enter possibly Amazon on the put side once it's a level of 22.85, Tesla 748, Netflix 419. Yes, Netflix will ultimately fall despite of the positivity that's got going on right now. JP Morgan earnings, this is what's going on. Jamie Dimon says, damn, shit is bad. This is just to summarize everything on here, guys. Okay, JP Morgan profits sink 70%, yet stock is up 2% pre-market. How is this even possible? Okay, so initial reaction to what was already expected to be a horrible earnings report is positive. So the initial reaction, guys, want to trade in the opposite of the initial reaction. So if it pops to a level of 100, it's currently trading 99.51 pre-market. If it pops to 100, 101, this could be a good entry on the put side. But if you really study this, I mean, there's nothing good in here. They're waiting for potential losses in loans that they've made to consumers and businesses to the magnitude of about $7 billion. Okay, so these are insane numbers. Okay, so with that said, this is the initial reaction. The company, after this horrendous numbers, they actually managed to pop. It's like to be reversed, but we want to come in and short a little bit. Now, JP Morgan is not the best financial stock to short, but the options are going to be cheap on it. So if you have a small account, you can partake. Just don't expect returns of 400-500% on that. You're going into JP Morgan stock to literally make just double the money, 50% return. That's it. Okay, Wells Fargo so far is staging a move 12. As you know, we don't like trading Wells Fargo. It moves like a turtle. Options are cheap. If you got a small account, you could, but it's overall pointing that even after the earnings report, investors are not excited. It's likely to move sideways. In sideways trend, guys, you don't want to be trading directional options. So overall, we suggest staying away from Wells Fargo. But this cookie right here is baked, guys. So the expectations for Roku, okay, are running hot again. And we like this level about $110 to come in and buy puts on what seems to be highly positive data for Roku as far as the growth number year over year. Considering it's also got a ton of negatives going on, we believe that they're going to take this cookie out of the oven and they're going to eat it, meaning they're going to take profits and use this level of around $110, $112 a share. That's where we are pre-market. As you see, we're dancing between 109 and 112.79 was the high pre-market so far. Okay, that's about 8:50 a.m. on March 14th. So basically use that area to come in. Now, don't expect like a huge drop to 90 area, but like a $5-10 drop possible. So if you're looking for a quick day trade, this could be an easy one right here. Okay, why should Johnson & Johnson be worth more now than it was before this situation with the coronavirus? Okay, there's really no freaking reasons for it. All the negatives still on the table for Johnson & Johnson. We like it right here on the pop. We want to come in and short 145, 140. Strike, we want to buy puts on those. Basically, ideally, we want to wait till it hits, maybe revisits this level of 146, 146.5. If it gets here after the market opens, we want to come in and buy puts on this. Now, S&P stock in the narrow trading tunnel, as this is actually yesterday's slide, so we want to short the 2820 level. We want to collect at 2720. That's basically the easy strategy that paid off yesterday. It's likely to continue paying off today and tomorrow. So overall, we want to target any signs of a move too. So ideally, you want to wait unless you're trading the earnings plays we just covered. You want to wait overall to trade the market till about 10:15 a.m. to see if there's any signs of a reversal. So if the market opens, it moves higher, slightly higher on lower volume. This could be ideal entry on actually buying some puts. So 10:15 is your time frame on entries that you're targeting. Next market move, we're targeting 2:11.6. Could look like this or a combination of either one of those moves. Basically, it's a topping move formation. Market pops. It loses momentum. It tries to pop it again, loses momentum into the close. This would be a characteristic of a 6 behavior. Overall, focus on markets, topping move, pop and drop. Pop it like it's hot, market, and then we're going to come in and short it. All right, sideways tunnel, we've covered that multiple times. Yesterday was a move 12 with the diminishing VIX. VIX keeps dropping pre-market. This is how the move 12 looks yesterday. Basically, market gaps down just a little. It creates a smiley face, finishes right around the levels where it starts the open at around 9:30. 2-day sequence 712. This is how 712 looks. Basically, the market says, hey, no worries about the crash. We still got some juice in the tank. We're going to move a little bit higher sideways. 5-day sequence 7-2, 7-7-12. At this point, the sequence is overwhelmed with the bullish moves. That tells us the bearish move is just right around the corner. However, if we take a look at the 5-day sequence, okay, the one concern is this is sort of a cup with a handle that's being created on the 5-day, 15-minute chart, at least in the last 48 hours. So beware if, for whatever crazy reason, the financials do rocket higher. This would actually be a meaningful reason for this cup with a handle to stage a breakout. If that's the case, beware of the next level of 28.84. But overall, we don't expect the market to exceed the level of 28.29 to the upside after that reversion and going lower for the rest of the day. VIX pre-market below. It is below 40 while the all is at the multi-year low. So that was the tunnel we were talking about yesterday. Hey, if it breaks, okay, you got to watch out for this type of situation. So 39.69 pre-market at the time I'm recording this. This is not a coincidental number. If you pull up the longer time frame of VIX, 39.68 is where the blue line is. Damn it! Can we just do a little undershoot from our tunnel, touch that line, and then reverse? So watch out for the VIX right about 10:15 a.m. If the VIX is hesitant to break the blue line, or maybe just dips briefly for a few minutes under that, and then it starts bouncing higher, this is your sign that you should start buying puts, guys. With that said, trade like a rockstar. I'll catch you on the next trade soon. Let's trade.